The big story out there really is oil as it continues its downward path. It's now broken through the $70 a barrel. That follows on from the latest OPEC meeting, where there was a little bit of talk that they would be looking at cutting some of the quotas out there to try and bump the price up. That didn't happen, and as a result of that, oil's fallen now about 10% since that meeting. Now this obviously has some pretty major implications out there. If you look at it with falling sort of gasoline prices, especially if you head into the Northern Hemisphere winter, that's going to give a lot more disposable income to families who live sort of paycheck to paycheck. If they're having to pay less for the gasoline prices, then potentially there's more to be spent out there. And obviously as we come into the Christmas period, that could bode all pretty well for sort of retail sales and the spending leading up to that period. On the flip side, that poses some pretty interesting questions. For some of these countries where the cost of production is a little bit more expensive than some of the shale operations in the US, and also countries sort of like Russia, where your cost of production is maybe closer to $100 a barrel. If you're only getting sort of $67 to $70 on the open market, you're not really going to take it out of the ground if you're for a $30 loss. And that then has some pretty major implications, not just for the companies, but also for those countries' GDP, etc. Certainly in the US, a lot of the bigger shale operations, supposedly the cost of production out there is maybe closer to $50 a barrel, so they're still operating on some reasonably healthy margins. But I see stories coming out of Russia with the cost of productions maybe $80, $90 or even $100. That poses some pretty interesting questions on their production. Elsewhere, as we head into sort of the Christmas period now, obviously with that lower oil price, that's going to further dampen the inflationary expectations out there. So interest rates are looking to, I'd say, still pretty low, certainly going into year end. Be interesting just to see the retail sales coming through, as I say, with that increased disposable income in the pockets of many consumers now. It'll be interesting to see if that is spent. Here in New Zealand, a couple of bond offers. We've got the Trustpower bond offer. If you are interested in that, call us on 0800 867 323. Also, Precinct Properties announced a potential for a bond offer out there as well, 7 years. Indication on that is sort of 550 to 565, maybe a tad higher. Again, if you're interested in that, call us on 0800 867 323. But given any sort of major surprises, it looks like it will be a slow sort of grind higher for these equity markets as we go into year end. The markets have had a pretty decent run this year, and certainly the sort of fundamentals out there still look pretty favourable to extend some of these gains going forward. ECB even seems to be sort of coming to the party now with talk about sort of quantitative easing, and that should really just give a little bit of a boost to the European sector as well. So to summarise, if you're interested in those two bonds, the Trustpower or the Precinct, call us on 0800 867 323 or go to the website www.bayfinancialpartners.co.nz for lots of interesting articles. We look forward to speaking to you soon.